So that is all with this example. Let us take up one more example on step acquisition. One more example that is an RTP, okay, revision test paper. Question. It is May 2023 RTP question. Okay. Here we go. Yes.
Yes, sir. High Speed Limited manufactures.
It is there in the handout. Okay. It is there in your handout, marked as part 3.
The company wants to foray into the two-wheeler business, and
that is, they want to get into foray, make an entry into two-wheeler business.
And therefore, it acquires 30% interest in Quick Bikes Limited for rupees 5 lakh as at 1st November 20x1.
You saw on 1st November 20x1, I bought 30% shares, that is ownership interest in your company, right? On 1st November for how much?
5 lakh rupees.
I paid 5 lakh rupees for the 30% ownership interest. Next.
And an additional 25% stake as at 1st January 20x2 for rupees 5 lakh.
You saw on 1st January 20x2, I purchased another 25. What is 30 plus 25?
55.
More than 50. Therefore, I start to control your entity from 1st January x2. So that becomes the acquisition date. That is a date on which the acquirer obtains control over the acquiree. Yes?
Yes, sir.
On 1st January x2, I bought another 25% interest for how much?
5
For 5 lakh rupees. Wait. In this sum, they wouldn't have given the fair value of the previously held equity interest. Then how do you find the fair value? There is a way out. If 25% on 1st Jan x2 costed you how much?
5 lakh rupees.
Costed you is actually wrong English.
Okay.
Cost you how much?
5 lakh.
So 25% is 5 lakh rupees means what is 30%? What are you going to do? 5 lakh
Divided
by 25 into 30. How much?
6 lakh.
Exactly. Now you can say that the fair value of the previously held equity interest, how much?
5
Is 6 lakh
6
rupees.
lakh.
6 lakh.
5 lakh is valid 6 lakh.
And 5 lakh is the consideration I paid now. Basically, para 32A, what is subdivision 1? 5 lakh rupees what I paid on 1st Jan x2. Understood?
Yes, sir.
And what is A subdivision 3? 6 lakh.
Previously held.
Exactly the fair value of the previously held equity interest.
Got it, sir.
Get it?
Yes, sir. Should I continue?
Continue. Wait. After 55% I control, what is Venkat non-controlling interest now? 45%, 100 minus 55, right? 45%. And again the question will say the company wants to fair value the NCI. That means they want to measure the non-controlling interest at its fair value. That's what acquisition date, fair value. You're right. Okay. Now how do I find the fair value? Again, they wouldn't have given information about what? The share price of your company. If it is given, what I can do? I can take the number of shares held by Venkat into the share price. We have done that. Remember those sums? Bird, cat, mouse, prune, Satsuma, apple, blah, blah, blah. In those sums, we have fair valued NCI. We took the number of shares held by Venkat into the share price. Now, I don't know whether you remember the sum, Paris, Strasbourg. So what are you even talking, sir? Huh? You gone crazy or what? Not me. Fine. Now listen. Now what happens? How do you find the fair value of 45%? Again, you use the same logic. What is that? If 25% is 5 lakh rupees, right? What is 45%?
9 lakh rupees.
But actually, I don't agree with all this because when I bought the 25% on 1st Jan x2, I would have paid something called the control premium. You know that? Whenever I'm going to obtain control over the acquiree, the owners who are selling the shares to me will demand something
Extra.
More than the company's current market price. You know, I pay something called control premium. You remember the phrase control premium?
Yes, sir. Following is
read further.
Following is the balance sheet of Quick Bikes Limited as at 1st January 2020.
What is that? He has given the Balance sheet asset.
Acquisition date.
So that you can calculate the net identifiable assets. You can take all the assets. Normally, what is the route we take? We take share capital plus
Retained earnings.
and then adjust for any fair value increase or decrease. But here, they are given the balance sheet asset acquisition date. Good. You can take all the assets minus liability to find the net assets.
Okay. We have liabilities with its carrying value and fair value. Same as assets, its carrying value and fair value.
Fair value. Now read the assets now first for me.
Plant and equipment, its carrying value is 3,50,000. The fair value is at 7,50,000.
That means what? There is a 4 lakh uplift. Next.
Investment in bonds, carrying value 4 lakh, fair value 5 lakh.
Again, rupees 1 lakh increase in the fair value of bonds. Next.
Trade receivables, carrying value 50,000 and fair value 50,000.
No change. Next.
That's all for
Assets.
Total
Then
is 8 lakh.
the other
carrying
side.
Value. Liabilities, carrying value is 1 lakh. Reserves, 5 lakh.
1 lakh carrying fair value?
I mean, sorry, carrying value. It's not, nothing is given, sir.
Nothing. That means same 1 lakh.
Same 1 lakh.
Don't say nil. Okay. Next.
Okay. Reserves, 5,50,000.
5,50,000. Okay.
Trade payables, carrying value is 1,50,000 and fair value is 1,50,000 as well.
Which one? Trade?
Trade payables.
Payables. How much?
1,50,000, sir.
1,50,000. Okay.
Yeah. Carrying,
1,50,000.
carrying and fair value.
1,50,000.
50.
What is the first item?
Share capital.
Share capital.
Yeah.
How much?
1 lakh.
1 lakh.
Reserves,
Of that 1 lakh only, I am holding 55%.
Okay.
Right? And Venkat is holding 45%.
5%.
That's amount, but rupees 1 lakh, right? Next.
Total is 8 lakh rupees.
Mm-hmm.
Quick Bikes Limited sells the motorcycles under the brand name Super
Super Start. Okay.
which has a fair value of rupees 3,50,000 as at 1st January 20
Where is the 3,50,000 in your balance sheet?
It won't be there.
It's a printing mistake. No, they're right. The 3,50,000 is not there in your balance sheet because it is internally generated. Therefore, 3,50,000 not happening, but you will take it for computing the fair value of net identifiable assets. Now tell me, Sneha,
Yes, sir.
and even the rest. Please go ahead and calculate the fair value of net identifiable assets. Can we do that?
Yes, sir.
Take a calculator. Now tell me how much is property, plant, equipment, fair value.
7,50,000.
Key in that number 7,50,000 plus. How much in investment, James Bond?
5 lakh rupees.
License to kill. How much?
5 lakh.
5 lakh rupees take. Next.
Then trade receivables 50,000.
50,000 fair value, take it. And also include brand. How much? 3 lakh and 50,000. Add 3 lakh 50 also total.
60.
No. Total. Oh, 8 lakhs. What is the plant and machinery, ma?
7 lakh 50,000.
Okay, plus how much is bonds?
5 plus 16 lakh 50,000.
5 lakh plus
Trade
7 lakh. No, that's okay. Add even the
Trade
how much?
receivables
50,000. And then add brand.
3 lakh 50,000.
That's a total.
16 lakh 50,000.
From that you subtract
Trade payables.
trade payable,
1 lakh
same as
50,000.
book value, right?
Yes, sir.
How much net assets?
15 lakh.
Any other outside liability? No.
No.
15 lakh is supposed to be the fair value of identity, that is net identifiable assets. So can we do the other approach? What I've been learning in all those sums? Why not? Tell me what is share capital, Sneha?
1 lakh.
1 lakh. How much is retained earnings?
5 lakh 50,000.
In all?
6 lakh and 50,000.
Very good, yeah, brilliant. 6 lakh?
50,000.
50. Any other reserves?
No reserves.
Wait, huh?
No
No other reserves. Okay, how much? 6 lakh?
50,000.
Is a book value, right? Of assets. To this, add what is the increase in the value of property, plant? Add 4 lakh. And what is the increase in bonds?
1 lakh.
Add 1 lakh, add 5 lakh, add 1 lakh. And then add another
3 lakh.
3 lakh 50,000. Remember, we had that in Pauline, Sonia, Arthur brand. Add that was a 3 lakh 50,000.
15 lakh.
You saw 15 lakh. How nice. You can either take all the assets minus outside liabilities or share capital plus retained earnings and then the fair value adjustments. The fair value increase in plant and machinery and then bonds and also the fair value of an asset not recognized by acquiree but that can be recognized by acquirer because the brand will meet the definition of an asset that to what? An identifiable asset. Remember para 13 of IND AS 103, I made you read also. Which you may not remember now. But I made you read that. So please remember 15 lakh is supposed to be the net asset, net identifiable assets, fair value, right?
Yes, sir.
15 lakh.
They continue, sir.
No, before that, let's now, in our mind, let's do this mental accounting. Remember para 32 A1, 2, 3, right? What is A1? The amount I paid you people on 1st Jan X2, how much? 5 lakh.
5 lakh.
Plus, NCA how much? Remember I got 9 lakh.
9 lakh.
And then fair value previous interest how much? I got 6 lakh. Add all the three.
20 lakh.
20 lakh. Minus 15 lakh para 32B. Just now we got 15 lakh.
Yes, sir.
How much goodwill?
5 lakh.
Is a goodwill. Yes.
Yes.
You want to get a 5 lakh goodwill. Trust me. Yes.
Yes, sir. So this is a self-generated brand. Therefore, Quick Bikes Limited has not recognized the brand in its books.
That
of
we know,
accounts.
right?
Following is a separate balance sheet of High Speed Limited as of 1st January 20 X2.
Oh, yes, given for that. So that I can prepare my
Consolidated.
consolidated balance sheet as on 1st Jan X2. The only thing, there will be no post acquisition profits. There will be no working note number 5. Remember, we do working note 1, 2, 3, 4, 5. What is 1? Group structure. And 2, net assets at acquisition date. In that, there will be always a tail note. Post,
Acquisition.
that won't be there. Working note 3, what is that? Goodwill or gain from bargain purchase. And what is working note number 4? Non-controlling interest. Normally, we do add post acquisition. That won't be there. Understood?
Yes, sir.
You can just straight away take NCA from working note 3 itself. Whatever is there on acquisition date, in our example, 9 lakh. Understood?
Yes, sir.
Next.
Okay, liability. I'll go first.
No, I don't read the numbers. It's okay. So boring for me.
In relation to the acquisition of Quick Bikes Limited, you are required to pass the journal entries to give effect of business combination in accordance with IND AS 103.
103.
Asset acquisition date.
And do
1st
you
January
find
20
one more thing? One thing. Go to my balance sheet. Do you find investment in Quick Bikes?
Yes, sir.
How much?
10 lakh rupees.
10 lakh?
Yes, sir.
That 10 lakh on 1st Jan, right?
Yeah.
What is 10 lakh? The 5 lakh what I
Invested on
1st November.
Plus
Another 5 lakh what I paid on 1st January. I would have passed an entry, right? Investment to bank in my separate
Books.
balance sheet, right? In the separate financial state or standalone, right? That's why 10 lakh is there. Don't get scared. Next.
Okay. NCI is measured by using the entity at fair value. Provide working notes. Ignore deferred tax implication.
Oh, very good.
And prepare a consolidated second part. Prepare a consolidated balance sheet of High Speed Limited as of 1st January 20 X2.
Shall we
Yes, sir.
go to the solution?
Okay. Solution journal entries.
No, before that, workings.
Okay. Working notes. Calculation of fair value of shares on the acquisition date on 1st January 20 X2. 25% shares purchased on 1st January 20 X2's fair value is 5 lakh rupees.
5 lakh
Therefore,
rupees.
30% shares purchased on 1st November 20 X1 at rupees 5 lakh. So the fair value would be 5 lakh by 25% into 30%.
How much? 6 lakh.
6 lakh.
That is worth 6. We discussed, right? 6 lakh. Therefore, there's a 1 lakh increase.
So total consideration at fair value.
Again,
on
I don't
acquisition
agree with
date
that
is
total
11
consideration.
lakh.
Okay. It should be only 5 lakh consideration. And what is 6 lakh? It is a fair value of previously held equity interest in the acquiree. Don't add both and say 11 lakh, right? I don't agree with that. It's only what? 5 lakh is a consideration. And 6 lakh is what? Para 32A subdivision 3. So don't make a total. Okay, just show 6 lakh. Next.
Okay, they have done. They have total it, sir. So it's 11 lakh, and then less cost of investment is 10 lakh rupees. This 5 plus 5.
Don't do that way. I will compare 6 lakh and 5 lakh.
5 lakh.
The 6 lakh fair value and how much I paid on 1st November? 5 lakh.
5 lakh.
That 1 lakh is a fair value increase.
Gain charge.
And that gain to be recognized in my P&L. How much? 1 lakh.
1 lakh. Next.
So don't bother, write 6 lakh minus 5 lakh. With 6 lakh, the fair value minus how much I paid on 1st November? 5 lakh. So 1 lakh increase. Next.
Computation of net identifiable assets at fair value. Plant and equipment 7 lakh 50,000. Investment.
Oh, yes, what is the asset side approach?
Yes, sir.
Because
Investment.
all the numbers have been taken. Net how much? 15?
16 lakh.
16 lakh 50,000 minus 1 lakh and 50,000 net
15 lakh.
15 lakh rupees. The fair value of net identifiable assets. Next.
Next we have is a measurement of non-controlling interest. Share of NCI is 100 minus 30 minus again 25. You will get 45.
45% is NCI.
Taking fair value of shares on 1st January
He has done this
2022
way.
as a base.
11 lakh represents what? 55%. What is for 45? It's the same, right?
lakh.
How much is 9 lakh?
9 lakh.
What I did was I took 25% What you bought on 1st Jan is 5 lakh means what is for 45.
45.
What he has done is taken 5 lakh and 6 lakh, 11 lakh is a total fair value of 55%, right?
Okay.
What is for 45%? Is that clear?
Yes, sir.
Guys, I hope you're doing CA final. Some level of understanding. Yes or no? Am I okay? So 55% is 11 lakh. What is for 45%? How much you get? It is a 9 lakh rupees NCI. So can we do this way? What we discussed? No problem. I bought 25% on 1st Jan for how much? 5 lakh.
5 lakh.
What is for 45%? 9 lakh rupees. Understood?
Yes, sir.
Next.
Okay. Next we have is consolidated balance sheet of.
Now before that, I think you should find the goodwill, right?
Yes, sir.
They haven't done a working for goodwill. I want people to follow para 32. Sneha, you want to write down and display that?
Yes,
Fine.
sir.
So goodwill, what do you do? 32A1. What is A1? 5 lakh. And what is A2? NCI 9 lakh. What is A3? 6 lakh. In all, how much? It is 5 lakh, 9 lakh and 6 lakh, in all 20 lakh. Minus 15 lakh, how much you get? Para 32B. 5 lakh is your goodwill. Is that fine? So guys, you got to make a working note for what? For the 1 lakh rupee increase again. And also make a working for, what is that? The fair value of net identifiable assets. And also make a working for non-controlling interest 9 lakh. And then you make a working note based on para 32 to show the computation of goodwill. Make these 4 working notes. Then we shall discuss the journal. Journal. Only
Yes.
then after the balance sheet. Now complete these 4 working notes. Sneha,
Yes.
what are the first working? I want that the gain. How much? 1 lakh.
Okay, sir.
And then second working is for net assets, fair value. Then third working for NCI, fair value. Further, what are you going to do? If I do 5 lakh by 25 into 45, up to you, right?
Yes.
And fourth working is what? The goodwill para 32. Will you do that?
Yes.
You do all the 4. We can display that also on the screen and discuss. Fine.
Okay, sir.
Just pause the recording. Okay, so guys, refer to the working notes. The first working for fair valuing the previously held equity interest. I know that I bought a rupees 5 lakh worth of investments, 25% stake on 1st Jan X2. Using that, I can fair value the 30% interest I bought 2 months earlier, right? On 1st November X1. So it is 5 lakh by 25 into 30, how much? 6 lakh is a fair value. Minus what is the book value of those investments? 5 lakh rupees. Only those investments, right? What I bought on 1st November, 5 lakh. So 1 lakh is supposed to be the gain on fair valuation. And that will be shown in my profit and loss account. That's nothing but para 41/42. Now we go ahead with the second working. What is that?
Computation of net identifiable assets.
Exactly. That we know, right? Take all the assets and fair value minus liabilities. You get how much net assets? 15 lakh.
lakh.
That is same as what is there in the answer. And then comes a non-controlling interest. Again, we want to use the 1st Jan X2 acquisition. So 25% 5 lakh. What is for? 45% NCI. How much you get? 9 lakh rupees. And then next,
Computation of goodwill.
that is para 32. What is A1 amount?
5
It is 5 lakh. And what is A2?
9 lakh.
9 lakh. And A3?
6 lakh.
It is 6 lakh. You know what is A1? The consideration.
Consideration.
And then what is A2? It is?
Non NCI.
And then A3?
Previously
Held equity interest, fair valued. Add all the 3 minus?
Net identifiable assets.
Exactly.
15 lakh.
And you get a goodwill how much? 5 lakh.
5 lakh.
Now let us see the journal. But here the slight difference in the entry when you credit, because I already have rupees 10 lakh investment in my balance sheet. Yes or no?
Yes.
It is not I'm recording an entry for for the cash payment to you people. Got it? I already have investment in my books. Now just see the journal. What are the first? What are the debits you give?
Plant.
Don't write net identifiable assets, right? You have the breakup. It is a plant, property, plant, equipment, debit, how much?
7 lakh.
7,50,000 debit. And then debit bonds, how much?
5 lakh rupees.
5 lakh rupees. And debit,
Trade receivables.
how much?
50,000.
50,000 fair value. And then debit,
Brand.
brand, how much? 3,50,000. Also debit, goodwill, how much?
5
5 lakh. Then you write now normally 2 cash, The 5 lakh what we paid on 1st January.
Yes, sir.
And then we write to NCI and then to investment, right? Instead, what you can do, you can write to investment. How much is there?
10 lakh.
What is 10 lakh?
5 plus.
What I paid now 5 lakh on 1st Jan. What I paid 2 months ago.
5 lakh.
5 lakh. In all 10 lakh. So what about the 1 lakh increase, sir? We didn't pass any separate. No. Instead of passing a separate entry investment to P&L, I'm going to credit P&L in this entry itself. Got it?
Yes, sir.
To investment, how much? 10 lakh
10 lakh.
rupees. And then to
Profit or loss account, 1 lakh.
profit and loss account credit, how much? 1 lakh rupees. And to non-controlling interest, how much?
9 lakh 50,000.
9 lakh.
Oh, sorry, 9 lakh.
And then also credit what?
Trade payable.
Exactly. So
1
what you
lakh.
can do? You can do this way. First, debit all the assets. And then credit liabilities. And then cancel investment. And also recognize the rupees 1 lakh gain. Understood? And that is a journal. Now the balance sheet.
Yes, sir.
I will take my assets plus assets taken over in this entry, right? Yes.
Okay. Consolidated balance sheet of High Speed Limited.
Or my company.
Asset 1st January 20 X2.
Yes.
Assets, under that non-current assets.
Under that?
Property, plant and equipment, working note, note number 1, 21 lakhs.
What is 21 lakh? I will take my property, plant, equipment, which is 13 lakh and 50,000, right?
Yes, sir.
Plus rupees 7 lakh and 50,000 yours, which has been debited in that entry.
Yeah.
In all, 21 lakh in the balance sheet.
Yes.
Next item,
Intangible asset.
that is nothing but, that is a brand.
Brand.
How much?
It's given 8 lakh 50,000, sir.
They added even Goodwill.
Goodwill together, yeah. Goodwill 5 lakh and brand value
What
is
to do?
3 lakh 50,000.
They are absolutely wrong. Because remember, you have to show Goodwill separately. No, first, after property, plant, what is the next item? Goodwill. How much? 5 lakh.
5 lakh.
And then next line what? Other intangible assets hyphen brand. How much?
3 lakh 50,000.
Have you got a note for this?
Sir?
They give a note.
Yeah, intangible asset. No,
They added
sir.
both, huh?
Goodwill and brand value both together.
You're not supposed, is absolutely wrong. Don't do that because what is Goodwill? It is IND AS 103 asset. What about other intangible brand? IND AS 38.
38.
If you see even the IND AS balance sheet format, you'll find Goodwill as a separate line item. Then comes other intangibles. I will suggest don't make that note number 2 at all. Instead, what do you write in the balance sheet? Goodwill
and in
5 lakh
other
rupees.
intangible asset.
Then 3 lakh 50,000, right? Or 5 lakh.
Goodwill is 5 lakh.
Other intangibles, brand 3 lakh and 50,000.
Yes, sir.
Understood? Put it that way. Next,
Investment in bonds 5 lakh.
that is a financial asset. Okay, that is my bonds, if any, plus yours. Next,
Next is current assets.
Uh-huh.
A, financial assets. Trade receivables, working note 3.
again add both
Yeah.
mine and yours. Next,
Totaling 1 lakh 30,000.
next,
And then we have cash and cash equivalents.
equivalence.
Working note 4, 5 lakh
I
20,000.
think only I have cash.
Only, no, sir.
High speed 5 lakh and 20,000, right?
Quick Bikes Limited.
Is
5
there
lakh
a-
20,000. Yes, sir.
No.
But I think it's wrong, no?
Now, how much is there actually? Just see the balance sheet. Go to the question.
Yes, sir. It's only in the High Speed Limited we have cash and cash bank balance 5 lakh 20,000.
It's not there in quick bikes, right?
No,
That's all. Only my cash.
only my cash, but it's given.
Okay, that is my cash, not your cash. You shouldn't say my. Okay, it's only my
Your cash.
high speed. How much? 5
5
lakh and
20,000.
20,000. What are they given the note?
No, they are giving Quick Bikes, sir.
No. High speed 5 lakh 20,000. Quick bikes 0.
0.
In all 5 lakh and 20,000. Next,
Next we have one sec.
equity and
Total is
liabilities
41 lakh. Equity and liabilities, equity share capital
of high
5
speed
lakh.
alone. How much?
5 lakh.
5 lakh rupees. Then
And other equity working on 5, you have 16 lakh.
what is 16 lakh comprise of?
Other equity reserves, High Speed Limited 15 lakhs.
That's it. And then
And add gain on investment in Quick Bikes Limited 1 lakh.
that is all P&L credit.
Totaling 16 lakh.
That's it. Don't consider the reserves and surplus of the subsidiary company. And here there is no post acquisition
Acquisition
profits
profit.
also, because we are preparing a balance sheet on acquisition date. Next,
Next is non-controlling interest.
we
working
know that
interest,
9 lakh rupees. Whatever working on number, right?
No
Next.
working on, sir. Okay.
You have shown a note, no?
Yes, sir. We have shown. Yeah.
9 lakh. Next,
Current liabilities. A, financial liabilities.
under that,
Borrowing.
borrowings.
Borrowing 6. Note number 6, 4 lakh.
Okay.
And trade payables.
Trade payables, my trade payable plus your trade payable.
Note 7, 4 lakh 50,000.
Nothing but 3 lakh plus 1,50,000. In all, 4,50,000.
And other current liabilities,
Mm-hmm.
2,50,000.
2,50,000. I think only my other current
High
liabilities.
speed only.
That's it.
Totally 41 lakh.
That is not the balance sheet. Guys, one major mistake. What is that? On the asset side, do show after property, plant, equipment, show goodwill. How much?
5 lakh.
5 lakh rupees. And other intangible assets,
Brand.
3,50,000 brand.
Yes.
And don't show 8,50,000. It will not save your time. It will expand your time. You have to go write one more time in the examination, right? After 3 months or 4 months. So please go ahead and jot down the solution. You can pause the recording.
Start.
Now refer to the journal that we passed. You want to debit property, plant, equipment, and then debit the bonds, that is investment in bonds, and then debit trade receivables, and debit brand, also debit goodwill. Fine.
Yes, sir.
Now suppose to credit the liabilities assumed, trade payables, 1,50,000 credit, and we are used to crediting to cash, remember, or to share capital, or to contingent consideration. But here I am going to credit investment straight away because the 5 lakh what I paid on 1st Jan X2 is already there in my balance sheet as what? Investment in Quick Bikes. Got it? Therefore, instead of crediting all these and also crediting investment, the previously held interest, I credit straight away how much investment? 10 lakh.
10 lakh.
This 10 lakh includes what? The 5 lakh what I paid now plus 5 lakh what I paid 2 months earlier, right? So in all 10 lakh credited, and again on fair valuation of the previously held interest is credited to profit and loss account in the same entry. That is supposed to be the gain on fair valuation, 1 lakh rupees, and then credit non-controlling interest, how much? Rupees 9 lakh.
9 lakh.
Got it?
Yes, sir.
So guys, with that we complete this example. We are done for the day. Bye-bye.
Bye.